world's most valuable asset by market cap, gold is continuing its remarkable rally, but is it still a smart investment when its price has nearly doubled in a year? For more on this, our economics correspondent Park Jun is here with us in the studio to tell us more about the rising gold prices and also to suggest options on how to invest wisely in gold here in South Korea. So welcome, Jun.
Thanks for having me, Sujin.
So Jun, I heard you went to Seoul's Jongno Jewelry District yourself to investigate the rising gold prices. So what are some interesting aspects of your visit that you'd like to share with us today?
Right, Sujin, on Wednesday, I went to Jongno Jewelry District where you could find shops that sell gold and silver. The visit happened to coincide with the purchasing price for 1 ton of gold surpassing the 1 million Korean won, which is almost a 5-fold increase in the last 6 years and a 20-fold increase in under 25 years. Ton is a traditional Korean unit of weight used for precious metals, with 1 ton of gold equal to 3.75 grams. Let's take a closer look at a gold shop and factory I went to. The price of gold is skyrocketing day by day. And this is not just an upward trend that has been going on in the past few months. Even though the price of gold is rapidly rising, investors are actively buying it, an asset that does not decay, retains value, and is globally accepted.
My mother turned 60 this year, so I came to buy a gold bracelet as a commemorative gift. Gold prices have risen a lot recently, but I think they may continue to climb, so I felt it was better to buy it sooner rather than later.
The sharp rise in gold prices has been particularly evident over the last few years, and especially when US President Donald Trump was inaugurated in January 2025. In the past 5 years, the price of gold has risen from around $1,852 per troy ounce to approximately $4,800. This is a 159.1% increase over that period. And when it comes to Korean won, the increase becomes far more pronounced. Over the same 5-year period, the purchase price of gold jumped from just 271,000 won per ton, or 3.75 grams, to 993,000 won. That marks a 266.4% increase. Although international gold prices have steeply risen, the hike is seen more prominently in Korea, with the dollar value against the Korean won appreciating by more than 33% in those 5 years. Alongside that, buying physical gold in Korea can add 15% to the price due to value-added tax and labor charges. Now, as you can see, this 1 kilogram gold bar I'm holding is worth more than 265 million Korean won, or roughly 180,000 US dollars. The managing director of the Korea Gold Exchange, whose company produces and sells billions of dollars worth of gold and silver annually in Korea, says global uncertainty has driven the steep price hikes.
Global economic instability, ongoing wars, and uncertainty surrounding the U.S. dollar's depreciation have all combined to push gold prices sharply higher, with new issues continuing to emerge, including the situation involving Greenland just yesterday. Uncertainty is intensifying, and that upward trend appears to be gaining further momentum.
Looking ahead, long-term gold prices will be shaped by a mix of inflationary trends, interest rates, and geopolitical risks. Alongside this, global economic uncertainty and monetary policy will also be key factors affecting prices.
And it's because of this global economic uncertainty that many people are considering investing in gold. So for those people, Chunan, do you have any tips on how they might minimize their tax burden?
Sure, Sujin. So it's always good to try to minimize the amount of tax you pay and make investments efficiently. The first option someone might consider is buying physical gold. You buy gold bars or coins directly from reputable shops. A good thing about that is owning something tangible, and it's great for long-term holding or passing on to children or other family members. But the problem is that you might not make a profit out of gold unless its price goes up by at least 15%. That's because of the 10% value-added tax in Korea, plus a labor charge of about 5%, which is already included when you buy gold. The second option is using the domestic KRX gold spot market. You can simply buy tiny amounts of gold through bank apps or your securities account without owning physical gold in your hand. For KRX spot trading, capital gains on price differences are tax exempt, making it very efficient for most people. On top of that, You do not have to pay additional fees such as the 10% value-added tax unless you decide to withdraw the gold in a physical form. Lastly, there are options using ETFs, both domestic and international. In Korea, products like gold ETFs trade just like stocks on the Kospi. When you sell a domestic ETF, the profit will be considered as dividend income, so you have to pay a total of 15.4%, including local tax on profits when you sell. An alternative option is using a US ETF like GLD that tracks international gold prices. Gains are combined with other overseas stock profits, and anything earned above 2.5 million won annually faces a 22% capital gains tax.
All right, Jian, thank you so much for joining me in the studio today.
Always a pleasure, Sujin.